Hello guys, welcome back to the channel. So in this lecture we will be dealing about corporate governance. So this is not only important for it from mains point of view, and it is very much relevant in our real life scenario as well. So let's get into lecture. See, in this lecture we'll be learning about what's corporate governance, key elements, objectives, different issues, existing measures and initiatives to ensure the corporate governance. What is the corporate governance from ethical perspective? Importance of ethically based corporate governance, principles of ethical corporate governance, ethical issues, and finally the way forward. So it's going to be quite long lecture, but I would say it's very interesting topic because it not only helps in the exam but also in day-to-day life. So let's start with it. See, according to Cadbury Committee, corporate governance is a system by which companies are directed and controlled so as to run it in the best interest of the all stakeholders and society at large. See, first things first, this is something corporate governance. What does corporate governance means? And this is the definition given by Cadbury Committee. So, Cadbury Committee is nothing but it was formed in UK in 1991 for looking into the corporate governance, and that committee gave this definition by it says system by which the companies a system where the company is directed and controlled, which is made sure to run for the best interest of all the stakeholders and the society at large. So that's something corporate governance is about. Now let's look into the key elements of the corporate governance. Board of Directors. The board plays a pivotal role in the corporate governance and provides the strategic direction and also ensures the accountability, as we all know. Like it's responsible for appointing top executives, monitoring performance, and makes important decisions. In the recent past, independent directors are also appointed to ensure integrity in corporate functioning. Next one is shareholder rights. Corporate governance, as you all know, emphasizes on protection of the rights of the shareholders, like right to vote, access to information, receiving a fair return on investment. They have the influence to influence the decisions of the company and hold the management accountable. Next one is ethics and integrity. Like corporate governance promotes ethical behavior and integrity within an organization, like establishing a code of conduct, ensuring compliance with laws and regulations, or fostering a culture of transparency, honesty, and fairness. That's an element, ethics and integrity. Followed by that, um, transparency and disclosure. Like companies are expected to provide timely and accurate information to shareholders and the stakeholders. Like it involves transparency in the sense involves clear communication of the financial performance, risks, or whatever information may be. Next one is the code of conduct. It is an essential that an organization explicitly prescribes a code of conduct. Like it should be communicated to all the stakeholders and should be made sure that it clearly is understood by them. And there should be also be a system to periodically evaluate their adherence to the code. Like good example you can say here is Google code of conduct emphasizes the values it maintains and outlines a variety of important factors throughout it, and clearly states who must adhere to the standards set forth and how misconduct will be addressed. Next one is the risk management. Effective corporate governance involves in identifying and managing risks which might impact the company's performance and reputation, like implementing risk assessment processes, internal controls, and risk mitigation strategies. These elements are very important in the set of corporate governance. So moving on to the next, now let's look into the objectives of corporate governance. Efficient management. So to develop better and the most efficient management of business organization, like Microsoft is one of the best country, followed by Apple, in the course of efficient management in the world. So they manage their resources, their, be it financial resources, material resources, or human resources. Everything they manage efficiently and bring the best out of them, and that's why they are called best organizations. Better applicable criteria. It's nothing but to develop more applicable criteria towards performing, like easier way to complete the task. That's something, developing a applicable criteria. Next one is transparency, like adopting the transparent procedures and practices, or arriving at the decisions on the strength of adequate information, and not just coming to decision with some vague information, or some just with some for namesake information. No, that should not happen. Socio-economic balance, like holding the balance between social and economic goals, is very much important in the objective of corporate governance. A corporate runs for profit, but at the same time it should not leave the social balance aside. It should try to balance the socio and economic goals. Next one is efficient use of resources. The encourage the efficient use of scarce resources must be in the country, must be in the company, corporate, so that resources are used properly and efficiently to avoid pollution or to avoid wastage of resources. Business on value. To develop the business transaction to be based on values. So it's nothing but creating a business which creates a value. Like, just because you have money doesn't mean that you should create some random things which doesn't have any use. No, create something which is useful for the people, or for the stakeholders, or for the society, and make it business on value. That's something business on value. Disclosure of information. To provide disclosures to all the relevant facts and information to stakeholders and the other partners of this business. Like in this part, like disclosure of information, Wipro has actually topped the list in the report on Indian corporate governance by the BSE Limited. Like, because they have better disclosures on the website, and in the annual report on aspects of board evaluation, leadership experience, and succession planning. So because of these things, Wipro stands at the top. Now let's look into the weakness or issues in corporate governance in India. Concentration of powers. See, ownership of corporations in India is still in few hands. Like, a single shareholder or family controls a large group of companies, and this leads to several governance related challenges, and has often led to poor decision which harms the company's profits. Yes, this can be seen very much. Like in early 2019, a court in Mumbai held Anil Ambani in criminal contempt for non-payment of personally guaranteed debt which the Reliance Communications owed to Swedish gear maker Ericsson. So that's concentration of power. Frequent removal of directors. The frequent removal of directors by promoters of the company is an issue. This has not been addressed effectively yet. But even though the strengthening of regulations regarding the independent directors have come, it has not been addressed completely yet. Like, as you all know, co-founder of Zomato, Gaurav Gupta, resigned, which was due to the earlier fallout between him and the founder of uh, Zomato, Deepinder Goyal. So that's something, frequent removal of directors. Insider trading, like corporate insiders, like officers, directors, and employees, by the virtue of the position, have access to confidential information, which misproportionate, misappropriate that information to reap profits. So that should not happen. Like, SCBI bars Future Group CEO from securities market in the insider trading case. Non-compliance with the disclosure norms. Non-compliance with the disclosure norms is actually common in India businesses with hardly any punitive action. See, while the Companies Act provides clear instruction for maintaining and updating registers, in reality, minority shareholders have often suffered from irregularities due to irregularities in the share transfers. Like, example, we can say Volkswagen, due to the non-compliance of the pollution norms in engine, has led to the Dieselgate scandal, which saw its stock shed nearly half its value in the days, in very few days. That's non-compliance with the disclosure norm. Family-owned business. Many Indian businesses are old family establishments. Like the growth of family and its business, there is an increase in chance of inefficiencies and internal conflicts which threaten the continuity of the business. Like Deloitte research in 2013 reported that family firms constitute 85% of the total companies in India and also contribute an ample share of employment in and domestic output. So, hope you guys got about the weakness and issues in the corporate governance of India. Moving on to the next, let's look into the existing measures and initiatives to ensure the corporate governance in India. Accounting standards, like it was issued by the Institute of Chartered Accountants of India to bring structure to the financial reporting and mandate of accounting policies, cash flow statements, related party disclosures, and more. Like you just cannot put in some random PowerPoint presentation or whatever form you can. No, there should be standard, and it was given by Institute of Chartered Accountants of India. Next one is Companies Act of 2013. It regulates the incorporation, formulation, and functioning of companies in India, which again here it empowers the shareholders and emphasizes higher values for corporate governance. CCI, Competition Commission of India. It was established to promote and sustain a competitive culture and curb the monopolistic tendencies and inspire fair and innovative business practices in India. Next one is National Company Law Tribunal. See, it deals with the corporate disputes of civil nature and serves as the adjudicating authority under the Insolvency and Bankruptcy Code. Next one is guidelines by ACBI. Like it's an authority, regulatory authority, as we all know, which oversees the listed companies issuing regulations, rules, and guidelines to ensure the protection of the investors. Next one is secretarial standards. Like it is issued by the Institute of Company Secretaries of India (ICSI), which here is establishing standards for company secretaries in accordance with the provisions of the Company Act, and that must be followed. Like these have few measures which India has ensured to take corporate governance in India. Now, we all saw what is corporate governance. Now, let's look into the corporate governance from the different aspect or perspective, particularly from the ethical perspective. See, from the ethical perspective, it refers to the process and policies a company has in place to balance the persuasion of market opportunities while also maintaining accountability and ethical integrity. It's nothing but like a company has to balance the market opportunities and at the same time maintain accountability and ethical integrity. A simple example, like a market might have demand for a good which a company is producing, high demand for the good which a company is producing. To ensure high profit, the company should not force their employees to produce more, but that ethical integrity should be maintained. Like Wipro and Tata Steel have been recognized by the Ethisphere Institute, which actually it's a global leader in defining and advancing the standards of ethical business practice. And it's acts as one of the world's most ethical companies. So that's something corporate governance which we are all should learn from. Moving on to the what are the importance of ethically based corporate governance? Profits. See, ethical corporate governance helps in growing the reputation of company, thus increases the profits. See, when I have a belief in you, I invest in you more, eventually you make more money and give me. So that should happen. It always leads to a better relationship among stakeholders, which enhances the performance of the organization. Investment. An ethically based corporate governance leads to more trust in the organization and its work culture, leading to more investors' interest. See, when a company works well, like for example Tata, eventually more people will be trying to invest there because its work culture and the ethically corporate governance model that in brings in more investors. Customer relationship. Ethical governance increases the customer loyalty, enhances brand image, and cater to the customer service and satisfaction. Like with the ethical business practices, complaints and issues of customers are solved transparently, which leads to the trust in the corporation. Tata again is a very good example. And also we can call such as food delivery platforms such as Swiggy or Zomato, which works on star rating and review systems. And next one is compassionate capitalism. See, if capitalism is to be respected and ensure sustainability, it must be both responsible and moral. See, businesses should adopt to a moral need in addition to its practical reliance on measure and profit or practical reliance on measures of profit and loss. See, they must be compassionate towards improving and also ensure their sustainability. So that develops the idea of compassionate capitalism. Moral guide for business. See, while laws and free market forces are necessary, they are inefficient guide for responsible business conduct, like tax avoidance. For example, this corporate ethics is an important guide for responsible conduct of businesses. This moral guide is very much important. Like you don't mm, like pay taxes properly without avoiding anything, or showing the proper profit rather than changing in the sheet adjustments. No, those things should not happen. And showing proper profits, which eventually help in better growth of the company. Now let us look into the principles of the ethical corporate governance. As we, it might have been done earlier, but still let's look at respecting the stakeholders beyond the shareholders. See, an ethical corporation contributes to society not only through products and services but also through employment and wealth generation. Like it should act with honesty and fairness towards its customers, suppliers, competitors, and the society at large. Only then a corporate can survive, contribute to economic and social development. An ethical corporation recognizes that businesses cannot sustainably prosper in societies that are falling or lack in economic development. A responsible business here therefore contributes to the socio-economic and environmental development of the community in which it operates. You not only take into the economic or social development but also work towards the economic development of a place, of the country. Next one is respect rules and conventions. An ethical corporation here should respect the local cultures and tradition in communities in which it operates, like working on the fundamental principles of equality, fairness, and also should be applicable to all national and international laws, which includes regulations, conventions, and also trading fairly and competitively. Next one, build trust by going beyond the letter of law. Like adhering to the spirit or intent behind the law as well as by the letter of law, like by requiring to go beyond the minimum legal obligations, like operating with truthfulness, transparency, and always maintaining the promise. Those things all is something which goes beyond the letter of the law. Support responsible globalization. See, a corporate is always a participant in the global marketplace. Like ethical business should always open and support open and fair multilateral trade. Like it supports reform of domestic rules and regulations when they unreasonably hinder the global dominance or global commerce. And finally, is the respect environment. Like it was made sure that a corporate operates within the environmental carrying capacity and complies with the best practices in the environmental management. Now let's look into the different issues with the corporate governance in India. Ethical issues. Conflict of interest. The challenge of managers potentially enriching themselves at the cost of shareholders. Example, a recent case of former ICICI Bank head Chanda Kochar, where she approved a loan to Videocon for a quid pro quo deal for her husband. That is something conflict of interest between other managers and other shareholders and herself. Weak board. Lack of diversity of experience and background refers a major area of weakness for these boards. Like there have been questions about board performing in the larger interest of the shareholders. Board of directors should have quite experienced people who can handle the thing and also work for the society at large. Separation of ownership and management. In case of family run companies, the separation of ownership and management remains a key challenge in majority of the company, including some of India's top ones. Yes, Reliance Industries, we can call it. Company owns it and also manages it. That's something a difficult thing which is very well seen. Independent directors. See, independent directors are partisan and are not able to check promoters' unethical practices. Like the lack of independent directors or lack of their obligation, or what you can call it, was one of the causes for failure of DHFL, PMC Bank, CG Power, and also more recently the sudden collapse of Jet Airways. They were not able to check promoters' unethical practices, and thus that led to their fall. Executive compensation. Executive compensation is a contentious issue where when subject to shareholders accountability, like the compensation should stand to the rest of the stakeholders scrutiny. Like you should compensate them when some issue happens rather than bluffing. As a corporate, you are deemed to benefit or work towards the benefit of the shareholder. Now let's look into the way forward. Responsibilities of the board. See, the corporate governance board should ensure the effective monitoring by the board and also the accountability of the board to the companies and its shareholders. That should be taken care of. Objective performance evaluation. Privileges and compensation of executive directors should be based on the objective performance evaluation which is conducted by the board. Enhancing objectivity. A code of conduct and code of corporate governance should be put in place in order to dictate desired behavior. Relation with shareholders. The board should be responsible for ensuring that an appropriate dialogue or conversation takes place between different among the organization and its shareholders also. Like it should treat all the shareholders, including minority and foreign shareholders, equally. Finally comes the transparency. The corporate governance framework should ensure that timely and accurate disclosure is made on all matters with respect to the corporation, including the financial situation, performance, ownership, and the governance of the company. So, this is a very, very important topic, as I said earlier, and we can all expect at least one question from this topic in UPSC Mains. So that's it for corporate governance. Hope you guys understood this topic. This might have been quite long lecture, but yes, it might have been interesting if you have looked into it. Do comment your doubts either in the Telegram channel or the YouTube comment section as well, and we'll clear as soon as possible. So we have only one more topic to complete this unit, which we will be dealing with the next lecture. Thank you.